On that note, let's kickstart the show with the global markets then. And Shreyansi, rather flat day coming in for the US, but back-to-back decline for the S&P 500.
Well, absolutely. Good morning, Sneha. And that sums it right up, because when you take a look at the US markets, that largely is the kind of handover that you're looking at now. When you take a look at the S&P 500 as well as the Dow, you're looking at marginal declines coming in for both of them. And when you take a look at Nasdaq, though, on the flip side, that rose just about 0.2%. So that's the kind of move that you saw coming in for the Nasdaq as well. When you take a look at the 10-year Treasury yield, though, that has been on an upturn of late. So briefly topping that 4.2% level that we saw coming in and keeping stocks under pressure as well. So that is also something that we've seen also slightly pressuring equities as well. And robust economic data is, of course, the backdrop that all of this is coming against, along with deficit worries that are among the factors behind the rise in the 10-year Treasury yield as well, despite a half-point rate cut from the Federal Reserve in September as well. Now, in terms of what else traders are concerned about, traders are also growing concerned that the central bank policymakers may be less inclined to reduce rates. So that is something that the market is keeping an eye on, even as the Fed had forecasted another half-point worth of trimming before the year ends as well. Now, a slate of notable names, of course, will be reporting earnings on Wednesday. AT&T, Coca-Cola, Boeing are also on deck before the bell, and Tesla and IBM will be sharing results after the close. So that largely is the kind of handover that we have, both in terms of the markets as well as the earnings that we're keeping an eye on. Lastly, let's take a quick look at the European markets, because they closed just a tad bit lower. So that largely is the kind of handover that we have shaping up, at least when it comes to European equities as well as the American markets as well. But let's also take a look at US crude oil, Snehi, because extending gains is where the oil market was at this point.
Absolutely, it's looking good for WTI, not looking very good for Brent coming in right now, although that has also surged slightly. But right now, Brent is under pressure, 0.4% lower, $75.75 per barrel is where Brent is at. But if you take a look at what WTI was up to yesterday, US crude oil futures extended gains after rising nearly 2% in the previous session. Oil prices have bounced back somewhat, after selling off steeply last week. Traders increasingly view a supply disruption in the Middle East due to Israel-Iran tensions as unlikely. Weak demand in China has also weighed on prices recently. Also, remember, Beijing cut its benchmark lending rates on Monday, lending some support to the futures markets. So that's roughly everything that's been happening with oil. Of course, in the background, you have the entire geopolitical stress that comes into play. On one hand, you also have the US elections that are near approaching. Trouble continues for Nikkei as well. You have China that's getting back some footing, but lots is happening in China, and basically the oil producers and consumers are both in focus on the back of this Israel-Hamas war that has been going on for more than a year now, and oil continues to be volatile. But it's looking good for WTI because it's above that 70 mark at $72 per barrel. Brent holding on to that $75 per barrel mark. But let's move on.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.